First Republic shares actually plunging. The troubled regional bank said that deposits were down nearly 41% in the first quarter. That was worse than the street had been expecting, although executives did say deposit flows have since stabilized. The bank plans to cut expenses, including laying off 20 to 25% of its workforce and reducing executive salaries. The bank is also pursuing strategic options. That stock right now down by over another 20%. Joining us this morning is Andrew Liesch, who is a senior research analyst at Piper Sandler. And Andrew, let's talk a little bit about this. We knew the numbers were going to be closely watched at First Republic. Those deposits were quite a bit worse than most people had been anticipating. How did it match up with what you were expecting?
Yeah, I was not expecting nearly that big of a fall. I was closer down to maybe $70 million is what obviously they'd spoke about, or the media reports earlier, 30 billion coming in from the consortium of banks. So I was expecting basically down 40 billion, and clearly a lot worse than that.
So what do you think?
Well, right now, I mean, they're out there. The current CD rates that they have that they're promoting range between 4 and 4.85 to try to get clients to bring their deposits back, and that's ultimately the plan, to bring those in, reduce their reliance on uninsured deposits, and then pay down the higher cost borrowing. So certainly, just with the cost of what this money is, it's going to make the earnings outlook much more challenging going forward. And I think as you see my estimates come out and the other analysts, that they're not going to be profitable for several quarters.
Several quarters, but you think there's, I mean, can you see light at the end of the tunnel, or is this something that's such a long tunnel that it's going to be quite a while before you even make a guess at that?
Well, I think right now, I think one of the things that would actually benefit the company would be lower rates. And if we go into a weaker economy and the Fed cuts rates, that would alleviate some of the deposit cost pressures, then the funding cost pressures that they're faced with. And
Fed's not likely to do that anytime soon.
No, not anytime soon. I think we're looking into next year at the earliest. So I think we're basically going to see the company lose money for the next several quarters.
If the Fed doesn't cut rates because it's still battling inflation, even if it decides to stop raising rates, if it doesn't cut rates, let's say for the next 2 years, how would that change your perspective on this?
That tunnel gets a lot longer then.
The idea that what they're doing by bringing in deposits certainly shores up the bank, and that's good news. Given the steep declines that we've seen, down 28% year to date, is this enough of a cut in the stock price to reflect the lower profitability outlook for that company or not?
I think so. I think right now, yeah, that would make sense. You still have some questions if the company's exploring their strategic options. Do they look to sell themselves? At what value would they be able to do that? You got to take the haircut in this interest rate scenario on the held to maturity portfolio and on the loan book, which is a little bit lower yielding than you're going to find elsewhere. So I do think that the stock reflects that dynamic today.
Yeah, there had been word out on the street that anyone who had been interested in this bank was very concerned, because if they did buy it, all of the hold to maturity would have to get marked to market, and that would be a pretty big issue for someone to swallow at this point.
And that's the problem with the sale right now in this environment. It certainly, if we do it win, and if we do have lower rates, it makes that proposition a little bit more attractive for any acquirer. Longer term, it is a good franchise with high net worth clients. So I think there's some long-term value there, but really you need a different interest rate scenario for that to be the case.
What about the money that other banks put into First Republic in terms of shoring it up?
I thought that sent a good signal of confidence that they want to at least help support First Republic manage through the issues they're going through.
Given the stock's decline, was it money well spent?
Well, it also, in the grand scheme of things, it also is not a very big drop in the bucket for these guys. I mean, $5 billion for J.P. Morgan doesn't really move the needle on their balance sheet. But I think it does show a positive signal that they're willing to help support another institution.
It's just deposits, right?
I mean, just deposits. They're insured deposits. Yeah, but I mean, when is this over? When's the movie end? I don't. I mean, well, do you think that go ahead.
Oh no, I think they're just gonna right now they're just gonna muddle through, and I think they'll lose money for the next several quarters. And if they can make it to the next, once we get to a lower interest rate scenario, that's when you'll see profitability start to improve.